Hello, everyone, and welcome to this deep dive brought to you by Westferry Times. I'm your host. Today, we're getting to something really, really vital for our future: the climate economy. We're going to unpack what that actually means, building an economic system that tackles climate change. We'll talk green jobs, putting a price on carbon pollution, and how businesses are, well, trying, or maybe just saying they are, to get to net zero. It's a huge topic, absolutely. But our aim here is to pull out the key insights and make it clear why all this matters to you.
It really is a fascinating shift and, frankly, an essential one. We're looking at a fundamental reshaping, really, of our economies to work within, well, planetary limits.
And to help us navigate this complex area, we're very pleased to welcome Dr. Marcus Ellison. Dr. Ellison is a highly respected economist, a senior policy fellow at the Institute for Sustainable Futures. And he's not just in academia, he's right there on the front lines advising governments, big companies. And he's a really strong voice for market-based climate solutions. A very warm welcome to this deep dive on Westferry Times.
Thanks very much for having me. It's definitely a critical time to be talking about these things with, clarity and focusing on the real world.
Okay, let's dive right in then. This term climate economy, what does it actually mean beyond the sort of buzzwords?
Right. Well, at its heart, the climate economy is this emerging system where growth and prosperity aren't tied directly to greenhouse gas emissions anymore. Now, the obvious things, they spring to mind, don't they? Solar panels, shiny electric cars, and yeah, those are definitely important pieces. But the climate economy goes much, much wider. It involves the whole financial system recalibrating for climate risks, climate opportunities. It's about developing resilient, sustainable infrastructure, think smart grids, green buildings, and really transforming those industries that have historically been, well, big emitters: transportation, manufacturing, even agriculture.
So it's not just about swapping technologies, it's a whole system overhaul.
Precisely. And it's also driven by, ideally, smart government policies and market signals. Things designed to push investment, push innovation towards greener options. We're talking carbon pricing, for instance, which we'll dig into. Things that create real incentives for businesses, for individuals to cut emissions. The climate economy, basically, it touches almost every part of how we produce things, how we consume things, how we live.
That's a great frame. Can you give us a few more concrete examples just to show that breadth you mentioned? It's more than just renewables, right?
Absolutely. Think about innovations in building materials. Concrete that actually absorbs CO2, for example. That's happening now. Or, the complex software, the algorithms being used to make energy grids smarter, more efficient, better at handling renewables, which can be variable. Then there's climate-smart agriculture, practices that cut farming emissions and make our food supply tougher against, changing weather. Even sectors you might not immediately think of, like insurance. They're deeply involved trying to figure out and price the growing risks from climate change. And like you said, even fashion seeing shifts to sustainable materials, circular models, trying to shrink its footprint. It really cuts across everything.
Okay, that definitely paints a clearer, much bigger picture. Let's zoom in now on, well, a really hot topic: green jobs. We hear so much about job creation potential. What's the reality behind those numbers?
Well, the potential for significant green job growth isn't just hype. It's increasingly backed by solid data. The International Labor Organization, the ILO, they estimate the global shift could create something like 24 million new jobs worldwide. By 2030, that's a really substantial change in the labor market.
24 million. Wow, that is huge.
Right.
Where are we seeing the most demand right now? What kind of jobs are we actually talking about? Is it all just putting up solar panels?
Solar installation is growing, yes, definitely. But the demand is actually pretty diverse. In the U.S., in Europe, for instance, yeah, lots of demand for renewable energy technicians. And that's installation, sure, but also really crucial maintenance: repair work, wind turbines, solar farms, all that infrastructure.
Yeah.
We also badly need more people skilled in green building, design, construction folks who know how to make buildings efficient and sustainable right from the start. And across nearly every sector, really, there's this growing need for sustainability consultants, people who help businesses figure out how to cut their impact, navigate this whole green shift. But it's also getting more complex. Renewable systems need specialized skills now: grid integration, energy storage. It's a mix of old engineering and new green tech.
That makes a lot of sense, but we can't really talk about this without addressing the flip side, can we? What about job losses, in those industries tied to fossil fuels? How do we handle that fairly?
Right. And that's absolutely critical. This is where just transition policies become, well, essential. paramount, really. We have a responsibility, I think, to make sure this shift doesn't just leave behind workers, communities that have depended on fossil fuels for generations. That means we need proactive investment, retraining programs, education, giving people the skills for these new green jobs. It also means having real strategies for economic diversification, support for those regions hit hardest by the decline in fossil fuels, local investment, community-led projects. Those are going to be absolutely key for a transition that feels fair.
Are governments actually doing enough on this front? Are there, real examples of these policies working?
Showing some promise. We are seeing some movement, yeah. Though, honestly, the scale, the ambition, often needs to be greater. The EU has its Just Transition mechanism. That provides funding, technical help to regions facing big challenges from the green shift. We're also seeing interesting pilot programs. Canada has some, parts of Australia too. They're trying different ways to support workers, create new opportunities. But look, it's still a major challenge. It needs sustained political will, significant money behind it. And it's not just governments either. The private sector has a huge role here, retraining their own people, supporting communities.
And what about getting the next generation ready? Are schools, universities adapting quickly enough for these green skills?
We're starting to see changes, definitely. But there's room to speed things up.
Yeah.
Universities are bringing in more specialized programs, environmental engineering focused on sustainability, green finance MBAs are popping up. Vocational schools, too, they're adding courses in solar installation, wind turbine maintenance, those crucial trades. But honestly, to meet the kind of demand we expect, we need a big scaling up of all these educational pathways. That means much closer working between schools, government, and businesses, making sure the training is relevant, getting enough people through the system. And it's not just brand new degrees, it's about weaving sustainability into existing fields too, like business engineering.
Okay, let's shift gears a bit. Another key part of this climate economy, carbon pricing. Sounds simple enough, make polluters pay, but it always seems to spark debate. Can you break down the basic idea for us?
Sure. The fundamental idea behind carbon pricing is putting a direct financial cost on emitting greenhouse gases. Think of it as making the price reflect the real costs, including the environmental damage, the social costs. Economists call these negative externalities, these hidden costs. They include things like health issues from air pollution or the damage from floods, storms, intensified by climate change. So by making it more expensive to emit CO2 and other greenhouse gases, you create this powerful economic nudge. It pushes businesses, individuals to cut emissions, invest in cleaner stuff, adopt more sustainable ways of doing things.
And typically governments use two main methods to do this, right?
That's right. The two main tools are a carbon tax and what's called a cap-and-trade system, or emissions trading. A carbon tax is pretty straightforward. You set a specific price per ton of greenhouse gas emitted. Pay up. It gives clear price certainty. Cap-and-trade, on the other hand, sets an overall limit, a cap on total emissions for a region or sector. This cap gets divided into allowances, which companies can buy, sell, trade amongst themselves. And usually, that cap gets lowered over time, forcing overall emissions down. The trading part gives companies flexibility to find the cheapest way to cut their pollution. A key difference really is tax gives price certainty, cap and trade gives certainty on the amount of reduction. The price in cap and trade can fluctuate, though.
We hear arguments for both. Do we have solid, real-world proof that these systems actually work? That they cut emissions without tanking the economy?
Yes, we absolutely do. When they're well designed, carbon pricing can be very effective. Look at British Columbia in Canada. They brought in a broad carbon tax quite early on. Lots of studies show their emissions went down while their economy kept growing just fine. So it shows you can have both carbon pricing and economic growth. The EU's emissions trading system, the EU ETS, that's another big one. It's been really important in cutting emissions from heavy industry, from the power sector across Europe over the last decade or so. So yeah, there's real evidence they work.
Okay, but one of the biggest worries you always hear is about fairness, how it might hit lower-income households harder, through higher energy bills. How do policymakers deal with that?
That's a really vital point. And it's crucial that these policies are designed with fairness right at the center. The key idea here is revenue recycling. Basically, what do you do with the money raised from the carbon price? Whether it's tax revenue or money from auctioning allowances in cap and trade, you use that money to offset the impact on lower income folks. You can do that in different ways: direct rebates, tax credits for families, cutting other taxes that hit the poor harder, or you could invest it in energy efficiency programs specifically for low-income communities, helping them use less energy in the first place. And the evidence suggests, if you do it right, with good revenue recycling, carbon pricing can actually be progressive. it can end up benefiting lower-income households, not hurting them.
That's fascinating, the idea it could actually be progressive. Now, it's not just governments doing this, is it? We're seeing companies use it too.
Absolutely. More and more companies are getting it. They see the financial risks down the road from carbon regulations, but also the opportunities in shifting to low carbon. So something like over 2,000 companies globally now use what's called an internal carbon price. It's basically a price they put on their own emissions internally. They use it for strategic planning, like deciding which projects are financially viable long-term, guiding investment decisions, pushing themselves to innovate in lower carbon tech and processes. You see big names doing this: Microsoft, Shell, Unilever. They've built internal carbon pricing into how they run their business. It really shows this growing understanding of the business world that managing carbon isn't just, an environmental nice to have, it's a core financial issue now.
That is a significant number of companies. Okay, let's talk about a goal many businesses are now aiming for, net zero. It's everywhere, that term. But how can we, as listeners, as consumers, tell the difference between real commitment and, well, what some call greenwashing?
Yeah, that's a really important question, and it definitely needs close looking at. There's a whole spectrum, really, when companies pledge net zero. At one end, you have companies genuinely transforming their business, really phasing out fossil fuels, redesigning supply chains, investing heavily in renewables, efficiency, developing new low-carbon products, real change. Then, at the other end, well, you might see companies whose claims lean very heavily on buying carbon offsets, planting trees, maybe, without actually cutting their own emissions much. Now, high-quality offsets can have a role, but they shouldn't be a substitute for deep cuts in a company's own operations and value chain. That's the core task.
So, what should listeners, maybe investors too, look for? What are the clues to tell who's serious and who's just sort of talking a good game?
Transparency and good accountability. Those are key. Look for companies that are open about their emissions data. Are their reduction targets checked by independent third parties? See if they've set science-based targets, maybe through the Science-Based Targets Initiative, the SBTI. That's a global standard aligning targets with climate science. You need to check, are they actually investing real money in cutting their own emissions across their whole supply chain, not just buying offsets? And if they are using offsets, how good are they? Are they credible? That needs scrutiny too. Things like ESG reporting, environmental, social, governance are evolving and can help. But we still need better regulations to make those disclosures standardized, comparable, and frankly, more rigorous. You really have to dig a bit deeper than the headlines sometimes.
Stepping back for a moment, looking at the big picture, is net zero actually achievable? Technically, economically, politically, can we really get there?
Technically, we actually have a lot of the technology we need already. And innovation is moving fast: renewables, storage, sustainable materials. It's impressive, economically. Well, yes, the transition needs huge investment up front, no doubt. But study after study shows the long-term costs of not acting on climate change are vastly higher than the cost of shifting to net zero. In fact, many economists see this climate economy as a major source of future growth, future jobs. The biggest hurdles, they often seem to be political. Getting to net zero needs consistent, supportive policies from governments. It needs strong international cooperation. It needs a massive shift in where capital flows. Often, the real bottleneck isn't the tech. It's human factors. Governance issues, vested interests, short-term thinking. But that said, there is growing momentum, especially in financial markets, which are definitely starting to see and price climate risk.
Looking ahead now, what are some of the really exciting opportunities you see bubbling up in this climate economy? What should we be keeping an eye on?
Oh, there are several really promising areas. Clean energy storage is massive. Breakthroughs in batteries, making green hydrogen cheaper. These could totally change how we use clean energy, solve that intermittency problem with solar and wind. Climate-smart agriculture, like I mentioned. Huge potential there to cut emissions from farming and make food systems more resilient. Green finance is another giant area. Trillions of dollars need to move to fund this transition. That's a huge opportunity. And then there's the intersection of digital tech and climate. Using AI, say, to optimize energy use in buildings or grids, or using blockchain for better, more transparent carbon tracking. Just a few examples of the dynamism out there.
And conversely, what are the biggest risks? What could potentially throw us off course?
I'd say the absolute biggest risks are delay and complacency, just not acting fast enough. The longer we wait to take really decisive, ambitious action, the harder and more expensive it gets to hit our climate goals and avoid the worst impacts. Another huge risk is backlash. If the transition isn't managed fairly, if people feel left behind or unfairly burdened, that could lead to political resistance, slowing everything down. It just underscores again how vital those just transition policies are, making sure the benefits are shared widely.
This has been incredibly insightful, really comprehensive. Thank you so much for sharing all your expertise with us today on this deep dive.
Hmm.
As a final thought for everyone listening, what's one key takeaway you'd want them to have about the climate economy?
I think I'd emphasize that this transition, it really is a huge opportunity for innovation, for economic growth, for building a more sustainable, more resilient future for all of us. It's not just about avoiding bad stuff. It's genuinely about building a better system. And there's a role for everyone in that, whatever your field, whatever your background.
That's beautifully put. Thank you again for joining us today on this deep dive into the climate economy.
Thank you. It was a real pleasure.
And thank you all for tuning in to this deep dive from Westferry Times. We really hope you found this discussion informative, maybe gave you some things to think about. If you did, please do consider subscribing to Westferry Times and maybe share this deep dive with others interested in this crucial link between climate and the economy. I'm your host, and until next time, goodbye.